Good morning, everyone, and welcome to the European crossover webinar. Hang on, make sure okay, welcome everybody to the European crossover webinar, and just want to make sure that everybody has good audio. Listen on the MacBook, so make sure that we don't have any audio issues. One thing I didn't note here is, and we did announce yesterday on the face webinar is, and it's going, actually I'm hitting the wrong keyboard. And we're going to have a new start time, and that's going to go on and begin this Monday. And that new start time is going to be 4 a.m. Eastern, which is essentially almost 3 hours earlier. And that's really to go on and provide more of a focus and attention to the European traders in the community. So that'll be 4 a.m. Eastern. Currently right now it's 6:45 Eastern. So you can see that's almost going to be 3 hours earlier. And I think that that's going to go on and, have which we discussed in the meeting, a good segmentation between the two webinars. And so one is focused to the early US session. This will be focused as we're beginning or just beginning to start here about an hour later in the European session. And, quite often you'll see, different changes. Right now we're a little bit slow this morning, but sometimes you'll see, pretty good moves in the euro, and then those moves beginning to reverse back afterwards. After we begin our the current webinar with the start time. But just wanted to go on and we'll make a few announcements just to make sure that everybody's fully aware, and that'll be starting this coming Monday, so just a few days away, and the new start time will be 4 a.m. Eastern time. Okay, coming into the States today, we are going to have core CPI coming in for today's reports. Also, EIA oil stocks, and that's going to be pretty much the extent of it right here. The actual mover being core CPI, and we do have capacity utilization for Canada. Starting to see the cable come off these lows, and the euro has also started to stabilize from these lower prices. No big movement, but we are starting to stabilize a bit here. Dollar CAD below 34. It was struggling even when the cash dollar index was pushing higher. Dollar CAD still wasn't able to go and push beyond this 34.20, and since then we've started to pair back. On the 30-minute and the EMAs, we do have a sell signal, a little bit of momentum. Dollar yen continues to go on and hang on around here. That may be helped in part with U.S. rates inching up a bit, and those are inching up a bit because we've had a decent rebound here in S&Ps. And the gold market just holding up reasonably steady. We did come down to the 1247. We had that for our take a look here. Yeah, well, that's what we had for our support, which was 1247. 1238, we have that marked as a huge daily support, but 1247, that's where they dipped to, 1247. They've been holding up very, very well. Mentioned that yesterday on the face webinar. But the momentum has actually changed a bit here. as we push lower, but still we held up here this 1247-ish right here very well. And the dollar Swissy is still hugging around its lows. Obviously, the news continues to remain the same, and although with the Chinese executive in Canada, I think she was able to post bail, so that certainly has lifted up the S&Ps a bit, avoid any further angst there. With that, we're just going to move into the news, and then we're going to get started on the bias chart. As you can see for today, not a whole lot of action that's transpiring so far. Although the dollar Swissy has made a move a little bit higher. The Canadian dollar firms as the market weighs trade and political signals. The Canadian dollar edged higher against its US counterpart on Tuesday as oil prices rose, but mixed signals for the market from the trade and political spheres helped keep the currency near a 1.5-year low hit last week. The S&P 500 gave up some of its gains after President Trump's threat to shut down the government over funding for a border, while under the boost to markets from optimism of the China-U.S. trade talks. The market has been whipped around by the trade uncertainty and the overall equity moves today, said Eric Nelson, currency strategist at Wells Fargo. It's not terribly surprising to see CAD follow suit. CAD is a major exporter of commodities, and including oil, and runs a current account deficit. So the economy could benefit from an improved outlook from global flow or trade of capital. The price of oil paired some of its gains, and there was a worry of a possible U.S. government shutdown. Still, crude oil futures, which fell sharply for the day, edged 1.3 higher at 51.65. You can see they're even $1 higher there at 52.61. Last Thursday, the loonie touched its weakest level in nearly 18 months at 34.45. Speculators have added to their bearish bets on the Canadian dollar for the fourth straight week. Data from the U.S. CFTC showed on Monday. Australian and New Zealand dollars upbeat on Sino-US trade hopes. The Australian and New Zealand dollars rose along with global equities on Wednesday as tentative signs of easing Sino-US trade tensions whetted risk appetite. A gauge of Asian Pacific shares outside of Japan jumped 0.9%, while U.S. stock futures were upbeat too. The New Zealand dollar was up 0.2% at 68.87. Inching towards the recent 6-month top 69.69. Risk appetite got a boost on Wednesday after President Trump said trade talks with Beijing were already underway, with more meetings likely among U.S. and Chinese officials. Trump told Reuters that the Chinese government was buying a tremendous amount of U.S. soybeans after the December 1 truce. Trade concerns are still creating the greatest downside in markets. Because of this, there is a two-way risk, said Kerry Craig. Any improvement in the U.S.-China relationship will be warmly welcomed by markets, and the announcement on auto tariffs illustrate that there's an upside. However, we wouldn't be surprised to see things get worse before they get better. Also helping sentiment was news that Hawaii Technologies Chief Financial Officer Meng Wanzhou was granted bail by a Canadian court on Tuesday, 10 days after arrest in Vancouver. The Aussies had had a tough year as the Sino-US trade tensions and worries about the global growth chilled investor sentiment, and the currency has either fallen or remained flat in every single month, but 2 so far in 2018. The Kiwi is down about 0.3. Like I said, it's fairly light news, and also obviously reflected here, you're just not seeing a whole lot of action here in these markets after they had fallen back. I'm talking about obviously the euro was dragged down by the pound, and we're coming a little bit, edging a little bit off those lows, but we still remain weak. Pound rebounds as UK's made pledges to fight on and warns Brexit at risk. Sterling rose on Wednesday as Prime Minister Theresa May vowed to fight a challenge to her leadership and warned rebels within her party that they risk delaying or even stopping Britain's departure from the European Union. The pound had fallen to 20-month lows overnight after lawmakers in May's Conservative Party gathered enough support to trigger a no-confidence vote in her leadership. But it stabilized as some investors bet that May would win Wednesday's vote, and in the process isolate opponents in her party who want a clean, sudden break from the EU. The ballot, which is being held at 1800 GMT and 2000 GMT on Wednesday, or between those hours, has further disrupted May's Brexit plans after she delayed a parliamentary vote on those plans on Monday. But less than 4 months until Britain is due to exit the European Union on March 29th, May warned the Brexit backers that if they toppled her, the departure from the EU would have to be delayed and perhaps even stopped. The pound rose as much as half a cent to 25.51. August against the euro, the sterling rose 0.3 to 90.255. Analysts at Nomura said they expected May to survive the vote because it had taken a long time for opponents to get the 48 letters needed to trigger a ballot, and because many lawmakers had a lot to lose in a change of leadership. We had reached 108 or so MPs who said they would vote against the deal, so we need all of them to vote against Theresa May plus another 40. That's a big risk, they wrote in a note. The big risk, it's a secret ballot. Other analysts were far less confident about May's chances. We believe there's a high probability she could be defeated in a vote of no confidence. The fact, go back here, that a leadership challenge has now been caused signals that opponents have confidence that PMA can now be toppled. The traders warned more volatility for sterling regardless of the outcome. If May wins only narrowly, her position will remain vulnerable. She'll also need to persuade her colleagues to back her Brexit plans when she seeks another parliamentary mandate. May is in a meeting with EU leaders this week trying to get her Brexit withdrawal agreement tweaked. The Prime Minister was expected to lose Monday's cancelled vote badly with opposition parties and many within her party angry at the deal she agreed with Brussels. Without parliamentary approval, May's Brexit plans are in disarray. A range of outcomes are possible, from a second referendum with the British public to a no-deal Brexit to a delayed Brexit. And the dollar up for a third day as yields rise. The pound fails. The dollar rose for a third consecutive day on Wednesday as U.S. Treasury yields rose before Federal Reserve meeting that is widely expected to raise interest rates for the fourth time this year. The dollar also got some help from reports China was considering cutting import tariffs on American-made cars to 15% from current 40%, and that a Canadian court granted bail to a top executive Chinese Hawaii Technologies. Investors' confidence is building on the U.S.-China trade front. That has helped the risk assets perform better today, said Stephen Ince. However, market moves were restrained with gauges of risk appetite, such as the Aussie and Euro Swiss franc. Sterling was the biggest loser, dropping below 125, triggered on a no-confidence vote. The 10-year Treasury yields inched up to 2.886, continue to pull back from recent lows. And rounding out, we'll finish with Italy and gold. Italy bond yields fell on Wednesday, outperforming the Eurozone peers after a local media report raised the prospect of fresh elections next year, and a rally in stock markets supported the appetite for the riskier assets. Italian Deputy Prime Minister Matteo Salvini denied on Wednesday a report in La Repubblica daily that his ruling League party was considering pushing for a snap election. Italy's bond yields, which fell sharply in early trade, pulled off their lows after Salvini denied but remained lower on the day. The prospects of an early general election that would be expected to lead to a more stable political situation is something that could get positive attention from BTP investors. Italian bond yields were down about 3 basis points. Snap election seen is unlikely until at least after the European Union parliamentary elections in May remained a risk that could take investors by surprise. Since the general election this March, the far-right league has gained ground in opinion polls, while support for its anti-establishment coalition partner Five Star have faded. The league is much stronger in the polls and must be chomping at the bits to call a vote, said Peter Chatwell with Mizuho. Outside Italy, the French bond yields were steady as the market stabilized after 3 days of heavy selling triggered by violent government protests. There's also a focus on Britain, where lawmakers and British Prime Minister Theresa May's Conservative Party triggered a confidence vote in her leadership. And lastly, with gold holds steady as the dollar strengthens, weighs on the market. Gold prices held steady on Wednesday, underpinned by expectations of fewer rate hikes. The dollar held a winter 1-month high against its peers, supported by a rebound in U.S. government bond yields. For now, it's the dollar that's exerted the most influence on the gold fade. The Fed is widely expected to raise rates in December 18-19 meeting, but the market is focusing on how much further it might lift rates next year after recent comments from Fed backers to decide the monetary policy based on data has been taken as a signal for lower rate hikes in 2019. Investors also kept a close eye on developments surrounding Brexit as an attempt to oust British Prime Minister Theresa May, held by the Conservative Party. ETF funds have been seeing positive outflows into gold. It indicates that perhaps the safe haven status of gold is back, indicative of investor sentiment toward the bullion. Holds of Spider Gold, the world's largest gold trust, rose 43 tenths to 763.56 tons. Okay, let's go on and get started now with the bias chart. As I said, it's a relatively quiet session overall. We're just not seeing a whole lot of movement. You're looking here at the euro, and these are, you would think that these were, maybe 15-minute bars, and look how tight the range has been. It's still moving up a little bit higher, but we are just trading in a very, very tight range here. You can see here for about the last, we're looking at about the last 4.5 hours, we've traded in a 21 pip range or 22 pip range for the last 4 hours. So it is very, very quiet. So let's take a look at where we stand here. Obviously, we went and got below this 1368 as, I think the pound really weighed on the euro. And also, those French issues, the tumult that they have going over there certainly has also weighed too, but the dollar pushing higher. Obviously, they trade with an inverse relationship. For right now, support comes in right there at 1309. Right there at 1309 here. And this is like I said, where the market was trying to push up and we've turned around and slid back. Let's move this here. When you look at it here on the daily, we're kind of in a, just a mixed area here, but really sliding below here. This is where the real support comes in. You can see this coming across that 1307.5. Actually, that's where they went to. If you look here on the daily. Right here, this close and open, and then coming across here. And the risk is that we could even slide back below 13. I think the market's just kind of holding here. I think we might have the opportunity, as things settle a little bit, to move up a little bit higher. But really, we need to reclaim 1356 on a short term, 1355 on a short term basis, just to, I wouldn't even say neutralize, but just to settle things down a bit. So we'll see how we close out, today. The risk is, like I said, this was, important for them to hold this area. They did, the 1307, but, you can easily sat back here below 113, but things have gotten pretty bad right here. So we'll see how we play out for right now. 1355 will be, I wouldn't say it's important, but it could help slow things down a bit. So not missing anything significant here on the daily. Other than we have certainly lost that upside move momentum. Looking here on the resistance. Well, for right now, on a very short-term basis, it's going to be 1356. So we're keeping it pretty close to the vest, 1356. And we would now have to move this now to bearish on a short-term basis. And the way that even with the way the dollar's index is trading right here, it almost seems like it's just waiting for something to go on and push one way or the other. Kind of started to flip things around now on the momentum here on the exponential moving averages. These momentums don't, that's why I've kind of focused a little bit more, is that you can see here when this momentum changes, it stays that way. It helps kind of guide the direction in the sense that the momentum, it's been, you know, frustrating few months in FX because these plays don't last for too long. The momentum changes, and the momentum on the exponential moving averages on the 30 minutes seem to work very well here on most of these pairs. You can see it right here. Let's go and move into the cable. Well, we did go in and break below the 125, and we'd been eyeing for over 2 weeks. We thought, wasn't sure when it was going to get there, but it certainly looked like it wanted to get there, which was 25.60. And certainly they made that beeline down there and made one more rally up here. Pretty decent rally before coming down here and sliding below here. The resistance on a short-term basis, this market is so oversold here. It has a lot to give. I'd have to stay right here. Is this 26.17 right there, because you can easily just fly right through here with some stops. And the market's really taken a pretty good hard beating. Heck, you could rally back up to 26.95, almost 150 pips higher, almost, and still not even change the complexion one iota. So other than the market saying, you know what, I think it might be overdone. You know what I mean? So it wouldn't even change it from bearish at all. So we're going to go with the 26.17 here on cable. And as far as support, support's going to come in right there. It's not saying a whole lot, but we've got 24.86. Here, there's actually a little bit further support right in here. Let's go right here, and you can see it right there. See that? It's actually going to be 25.15. Seems awfully close. Actually, right in here. But this is where they started to break them out. So we're going to go right there with 25.15. Right there, 25.15. We'll see if they can generate a little bit of short coverage today, but boy, like I said, it's in a world of hurt. And it doesn't look like anything will change that. The next big area would be that area that was held for so long, the 26.94. Even before then, right, if you actually see it, it comes in right here, which would be 26.81, and would not change the complexion of this one iota. which shows you how oversold this market is. We'll move into the Aussie dollar, which is same thing, just so they're hugging the lows. And certainly the fortunes have changed after, very, very good rally off of these lows. And look like it wants to break higher. We really probably got a little bit overexcited up in here. Remember, we had 73.78 as when we went with the levels as our resistance. So even when it pushed up higher, we thought, heck, it might even try to get up there to 74.18, but that 78 had held. But then things got a little bit tenuous with the whole China-U.S. relationship, and here we start all over again. And or as Yogi Berra used to say, it's deja vu all over again. Here we go, sliding back on the China news, and we certainly have pushed it and kept it lower, basically near even a bounce. As I guess I would see that more as a greater risk that may not even change, as this gentleman was saying. They would expect it to get worse before it gets better. So support, shorter time frame, is going to be right there at 71.73. In case you want to push these stops a little bit lower. 71.86 is key, but this is what would start to trigger at 71.73. And nothing changes here on the upside. You can see the resistance. We are very oversold. It's going to take some kind of a good news. And you know what? It's got to be disappointing that equity prices have had, a nice rebound, but it's not being materialized here in the Aussie dollar. But that would remain the resistance in case we're able to get things turned around. That would be the target they'll go to, which is 72.75. And certainly you can see it here on the daily. It just, we have a little bit of an inverted hammer right here, which allowed the market to push just a hair a little bit higher, but certainly we're not seeing anything materialize at this point. So once again, same thing here as we saw here on the intraday, 71.72.5, 71.73 on the daily is going to be big if we go and slide below that. And looking here with the Kiwi, we had the 68, 60, and 45 being key on the daily. We're certainly finally starting to go and push lower. And this is pretty important here on the daily, the 68, 45. If we're able to break here, we're going to go and keep this 68.45 because it is important. It's at the lower portion of this zone. It's going to be important if they're able to go on and get beyond that. Also, that was key on the daily. We'll go and take a look at that also. Where could it go to? Obviously, that would push it down right into here, 67.90. But we haven't broken it yet, although momentum's starting to go and change on this. But for now, we're going to go and keep this here. It's important to hold this area. If it doesn't, okay, well then, we know we're going to go and take a track for about 55 pips lower here. But for now, we're going to retain the 68.45. On the upside, well, that's going to have to be lowered here as we're having a little bit of trouble here. That would come in at 69.04. 69.05. We'll lower the upside resistance a bit. And we'll take a look at this on the fib also. And you see how important that is too. Look at that 68.40. That's a 23%, which is initially where they came down. They may want to try and see if they can test a little bit below that. Same thing here, as we said, it'll probably be making a move to trek towards the 67.90. So you'd be looking about 50 pips away if we're able to break that. So the momentum's starting to weaken here. Take a look at here on the daily. Really right there, it's actually that daily's at 68.36. 68, we can call it 68, well, 68.35 right there. So it's actually 68.35. Be important if we lose that on the daily. Let's go and mark that off here. I had that at 45, it's actually 35. Same thing, I want to keep this 45. We want to still retain that here. Then we want to see if they can test below that. And there's our 35. But it's important here on the daily. So they may try and push a little bit beyond the 68.45, but it's important. Like I said, if they get below 68.35 on the daily close, really has the opportunity then to break this thing lower. And as I said, potentially if we do break lower, you're looking about 50 pips lower here. And that's coming in right in this area here. Actually, as low as right here, 67.90. So you're talking just 55 pips. And let's go and move on to the dollar CAD. Well, we had 34.21 as our resistance. We're just looking straight up at the technicals, and that's where they ran out of gas at this 34. They got up actually as high as 34.24.5, but this is at 34.21. The momentum is starting to shift a little bit lower here. It has shifted lower, but and certainly crude oil finally starting to push up a little bit higher. Certainly doesn't hurt. Pretty important here for crude to maintain its head above that 52 area here. And we've seen that the shorts are building up against the Canadian currency. And for right now, we're above that key 33.43. We talked about the weekly. It's going to be important where we close this week. Let's take a look here on the daily. A close below the 333. Well, once again, that 33, well, it's actually in this case 34, will allow them to push it lower. The real key support will come in on the daily at 33.06 if we're able to go and slide back. The market appears to be just a little bit stretched, so any pairbacks, if you're short, I still have a short here, then you'd be looking this. You probably see some good demand around this 33.07. There'll be some at 33.35, but 33.07. Okay, intraday, well, we got 33.55. That might be a little bit too close. If they want to push them a little bit lower, let's go with 33.28. Still a ways away, though. There is some at 55, but and we have that 33.56, and 43 still remains fairly important. But if you're trying to see how far they can stretch, let's go 33.35. Important about the 33.43, if we could get a daily close below that. 34.21 remain rather stalwart. We'll take a look on the upside here. For now, we'll go with 34.13. 34.13. And certainly still bullish. And let's go and move into the dollar Swissy. We have been able to go and get past this resistance, obviously because of strength in the dollar. And we were down here towards the bottom lower part of this range. And it's actually defended this lower area here on the range and made this push higher. Resistance, well, that would be right up here at the top of the range. Already had a pretty good run so far. I'm not sure if it'd make it all the way. If you've already been long, you had a pretty good run. What would they take a pause? Right here. 99.73. We're not that far away. 99.73. Then we take a look at this. Let's see. No, we still have to say it's bearish. You'd have to push up high before we could say we've moved into a range. We're not that far away, but so we're looking right here at 99.73 for resistance. You see right there. Support comes in right here. You see this coming across just below these lows. That's going to be right there, 99.19. Still a ways away to go. And at least on a short-term basis, they'll probably be trying to buy any dips. Let's move that a little bit higher for right now. I don't think the market's going to try and end up giving its gains immediately away. So right there, 99. Let's call it 99.32. About 30 pips away. You can see here on a daily also some good resistance here, or targeting area, 99.77, 99.78, in case you want to get stretched a little bit further. And let's go move into the Dahle yen. Still holding up rather well here, and you can see here where the momentum changed here on the exponential moving averages, and it continued to move higher, and we got past that 1308, which was important, and it's held above there. Resistance, we have to just go with the technical levels right now, and that'd be right here at 1369. Certainly acting a little bit tired and certainly a bit susceptible here, but we'll see. But certainly it has that momentum going for it. So it's going to be 1369 on the upside. And we'd have to change this to bullish for right now. Claiming 1308 and defending it or retaining it well above it. Certainly change that tune on this. And for support, we'll come in right there, just below that. 1297. Real daily resistance comes in right there at 1385. 1385. And you see this 1296. That's been key, but this market is still holding up very well and just, you know, almost stuck in range, but with a positive bias. With that, we'll go on and move in now to the Dahle Index. And we certainly did go on and push up, and we're still holding up. But the market's acting a little bit tired, and a little bit of a gravestone doji here. I pointed that out in the chat room. We did go on and move a little bit lower, not significantly lower, but the market's acting a little bit tired. But we're kind of in a holding stance here. It almost feels like as if it's waiting for some type of a news to break out. I mean, or to susceptible. Let's say we get a dip. That's a dip then would take us down to 9704. So that's where the support will come in, 9704. And it's important that we got above this 97.14 on a daily. That has turned this thing to bullish. Now, obviously, the key thing would be to defend that, but holding up above 97.14, getting above that, has certainly flipped this thing towards a bullish mode. With resistance right here, 97.57, and we almost made it there yesterday. And we paired back a bit, but it'd be 97.57. Now we'll take a look at it on the daily also. But obviously getting above that 14 was huge. You can see that. Boy, that, you look at the daily, it really looks bullish. And 97.40 is pretty important at this point. They were able to defend. We got past 40. So keep an eye on that 97.40. This is actually more important at this point. 14 is important, but we were able to get above 40. If we lose that 40, then it's going to feel as if the market might be losing some momentum. So let's see that. Keep an eye on that, because we just got above 40, and that was also these two spikes here. So it's going to be actually 97.40 that you want to keep an eye on with the cash dollar index. Which is just about where we're at, or just a little bit lower. So it's going to be, if we lose 40 on the daily, it doesn't change it bearish at all, but it just questions if market might be a little bit stretched. And moving here to the gold market. Well, we had 1247. We talked about that. We actually had even gotten as low as, what, 1246, 45.90. We're looking for 1247 for support. That's held up very well. But the momentum has started to shift lower, actually been lower for a bit. You can see it shifted from here and continues to remain a little bit on the weaker side. But gold has held up very, very well. I mean, if you think about where the dollar is, I mean, it's amazing how gold has held up so well, although momentum-wise it's starting to slip a little bit here, and maybe susceptible if dollar continues to hold this area here. So where could we come down to? It's going to be right here at 42. 42. Doesn't mean we couldn't slide further. We talked about the 1237, 1238 being important, but potentially down here to 42, $6 lower. It's actually 41.90. And the momentum has changed, or started to change now. On the upside for gold, it's right there, 1251. 1251 for right now, for today. And let's go moving now to the 30-year bond. Well, we've seen that ease back a bit, and obviously for good reason, because you're seeing here with the S&Ps. And that certainly has been supportive here for the dollar yen as bond prices move lower, obviously inverse relationship, so yields move higher. There we go. So we had our support here for 42.15. Still holding up fairly strong here if you think about it. You're going to keep that here for right now, 42.15. And if you think about it, it's amazing that the dollar's been able to hold at these levels considering where bonds are. But then again, like I said, you see the same thing with bonds being higher. But so 42.15 is going to be our support here for the 30-year bonds. Just saw a pop up here in the euro. See this right here? And I've been talking about that. Let me see if there's Germany's Merkel says on trade, time is pressing for the EU. Mercosur free trade agreement will be more difficult with Brazil. No. Now, Italy bond yields, remember, they've been falling, and we're seeing a big move here with the euro here now. Not big, but now don't forget we had our resistance at 13.56, but you're seeing a nice little pop up here in the euro. We talked about this is that with the cash dollar index, that we were just looking, the markets act and look at this now at 97.24. Like it's almost as if, and we talked about this yesterday, and I said I posted this in chat room. We had this gravestone doji, but and now we're starting to pair back. Don't forget we're looking maybe down here at 97.04 for our resistance support. Euro we had at 13.56. The high was so far 13.51. Okay, so not too far away. We're seeing a nice little pop up in here. Well, this is nice to see. Dollar CAD now easing down here. Dollar yen just barely easing back. You're really making a punch right in here. Here's sterling. Here's cable. You see here, we're talking about this. Now we have resistance at 26.17. Okay. This is certainly helping here. And like I said, this market is so oversold here. You can rally up to 26.94. It doesn't even change the complexion one iota. The only thing would be like, well, I think the market's oversold. Or that'd be about the only thing. It certainly doesn't change it to not even, medium range or whatever. So, but look here for 26.17 here. Let's take a look here. Yeah, still quite the big fall. If you were to do a fib from here, the most recent rally, you could make it up to 26.43 would be the 23%. But look at this 26.17 here. Keep your peepers on that. Okay, so we just came up to 52 and 53. I've got a couple of positions that I'd put on yesterday. I'm gonna look to leg out of these. This would be, see if this is just a minor news here thing. So let me go and exit out of one of those. And we're just about here at 53. Boom, 53. Today's resistance is 56. 56. Okay. 56. Okay. I'm out of the second one too. That's it, because we just hit our resistance at 56. Doesn't mean we won't move higher. Gold's also reacting. Look at the Dahle Index. So anyway, let's go on and move back on. But we did hit our 56. So we've hit today's buys chart resistance. So if they move higher, so be it. That'd be great. But for right now, I'm not. Sometimes you see these news stories and then they're fleeting, and then you come right back down. I'm not saying it's going to come apart, but for right now, I don't mind being out. Let's go on and move in now to the bunds. Oh, wow. Now, this is one. Look at this. There you go. There's a reason, folks. Look at this. Look at the bunds. Look at the dollar. Look at the bonds here. Now, look at the bunds. Look at that drop in the bunds. And I was talking about this yesterday in the chat room because I was saying, hey, look, bunds, CC, the euro, because we'd seen the bunds start to pull back, and they're pairing back. Although it didn't make, I think it was down here around 40-ish. Yeah, they started pairing back pretty decent. But it's what's happening here in the bunds. There you go. This used to be a good, reliable indicator. A year ago, a couple of years ago, you could trade the euro with the bunds. If you saw a big movement in the euro, in the bunds, you could react real quickly in the euro. But anyway, that's it. So let's take a look here with the euro. With the bunds, support's going to come in at 63.09. You see it right there. So keep an eye on that. 63.09. You get down there. If you're still in the euro, you may want to consider lightening up. So that's 10 ticks away, 63.09. Also, market will be focusing on quite a bit as we move into the new time zone with the time start for the European crossover. So it's going to be 63.09 here for the bunds. Still trying to press this euro here. Hey, it looks good to me. Helps me on my cash dollar index too. Let's see here. And on the upside, it's going to be right here. Right there where it broke. 63.37. Yeah, euro just hanging around here. It's going to take a further move in the bunds to give it an extra little spike. And on the upside for the 30-year bond, oh my goodness, we're just about out of time anyway. 43, we'll call it 43.18. Got this move in the euro, and that kind of got us a little bit off kilter. I know Dale's going to be coming on. Let's go take a look here with the DAX. We'll keep it real simple. Resistance is 10,941. Need to hurry up and get the heck out of Dodge. And right here, right there, 10,830. Okay, there's the buys chart for today, and hurry up and get out of here. Dale needs to get started, and thanks for joining us here on the European Crossover Webinar.